Good morning, Big Wave Trading family. First off, really quick, let's just go over the major market averages. Following Monday's session, we took care of all of the damage of Thursday. So our models across the board are going from a soft sell signal. A hard sell signals when they're all below the 200-day moving averages on above average volume. It's not the case. So our soft sell signal, thanks to Monday's return, throws us right back into neutral. Now remember, it doesn't mean that you do anything different. Oh, now I need to go buy back everything that I just sold. It doesn't mean anything like that. It's just a guide that tells me how I need to operate in the market. Even when the soft sell switch came, you still notice this weekend, I still had new long signals. 3 ran without me, missed my limits. 1 hit my limit, and then immediately hit half of my stop. Guess what, folks? That's trading. It's going to happen. I'm moving up those limit orders to whatever Monday's low a day was. So like INVH, 2210 becomes my new limit. SPR, 6940 becomes my new limit. ALRM, 4096 becomes my new limit. And if they don't fill within 10 days, the trade is off. But the S&P 500, the NASDAQ, the Russell 2000, the Dow Jones Transportation Average, the New York Stock Exchange is the only index that didn't retake, but out of all the other ones, they all retook their Thursday highs, but we really don't get a signal with the NYSE, so it doesn't matter. Now, the dead cat bounce is just what it is, a dead cat bounce until we get further confirmation. We now have 2 up days. We're now looking for a follow-through day where the indexes rise at least 1% on above average volume or higher volume than the session before. Even if that's the case, we'll see how we trade. Remember, we're in the middle of August. We still have the rest of August and September to go through before we're out of the woods and before seasonality turns back in our favor midway through October. So, with all that being said, I have 3 new long positions. All 3 signals offer greater than 5-to-1 reward to risk ratio, and all 3 offer less than 5% of my total capital placed in that trade at risk. First off, we'll start with UPLD, the highest of the quality ones. This is a CanSlim quality stock. Very high quality. I did not write down the ratings, but I believe it has like a 98 composite, a 96 EPS, 98 relative strength rating. So very high ratings on Market Smith Investors Business Daily. Very nice previous uptrend, and no matter what part of this measured previous move I use, it gives me greater than 5-to-1 reward risk ratio by using the recent lows as our final cut loss level. So if the stock moves below 2247, you can be out of all of it, or you can be like me and be out of half of it with then your final stop right below the 719 low of 2205. Now remember, if it takes out this low on above average volume without taking up this low, all or either half of the remaining position stop will be raised to whatever the new low is. But for right now, UPLD, this was the quote, quote, highest quality signal. CanSlim quality, confirmed in my price volume BOP surge scan. Candle over candle, bullish hammer, reversal candle over candle pattern. BOP confirmation, above average volume. I want to get long, limit order 2416. And like I said, first cut loss 2247, maybe your only cut loss depending on your risk tolerance. And my final cut loss, and I recommend everyone else's, 2205. But that's the best one. But then there's ATRI. ATRI is probably overall one of the better picks because it's a $600 plus stock. But look at today's volume. 6,000 shares. So don't even think about taking a market order with this one. It's a limit order only using 629.65, the high of the day and the close as your limit. And there's really only one cut loss level, 617.05. But because these are going to be such small positions for me, I'm willing to give the second half of the position all the way to 596.70 before I cut it all. This first stop level goes on above average volume or it loses green BOP before this final stop comes into play. All or half of my remaining stop will be raised to whatever the new low a day is. But ATRI, I was really interested in getting long this stock back here. Was not able to get long. And as you can see, it moved 39% without me. And if I risk about 1 to 2% in this trade before I'm wrong, you can easily do the math. We're talking it over a 10-to-1 potential reward risk ratio. Same with UPLD. I mean, even if you do use these recent lows, and let's use like this level here, let's even go even deeper. Let's say that all hell breaks loose and we only risk 7% there. Well, if we get a measured move similar to this area, we're looking at a 58% gain. Once again, we're looking at over a 5-to-1 reward risk ratio. And then even from here to here, same thing, looking at over a 5-to-1 reward risk ratio. So UPLD, ATRI, two similar situations. And the final long signal, SBBX, pocket pivot point signal. Volume isn't above average, but this is also a very high quality canned slim stock. It is also thin, so it's limit order only. Caveat emptor with ATRI and SBBX. I don't mind placing small portions of my total account capital into these thin names because I don't buy enough shares to move the stock. Plus, I'm using limit stop limit orders, so it doesn't matter. But SBBX limit order 23.95. First cut loss, the lows right here, 23.70. The final cut loss, these low back here, 23.60. You could also use only 23.70 as your final cut loss, or you could also use 23.60. It's up to you, but do not hold the stock if it breaks this level. So SBBX, 23.95 limit order. It's a CanSlim quality stock, so it's 2% of my account capital. And why the hell not? We're back under a neutral condition with very tight stops, so we'll keep it at 2%. ATRI, same situation, CanSlim quality stock. We'll keep it at a 2% long position. And then UPLD, 2% for CanSlim, 1% for the price volume BOP surge scan, 3% total position. So those are the three new long positions. And don't forget, ALRM is still on the books. SPR is still on the books. And my brain is already forgetting the other one. Wow. I'm going to have to go backwards. Man, I hate it when I can't remember stuff. INVH, and you can pretty much forget that I'll probably get filled on this one at all. But crazier things have happened. All right, everybody. Great luck on Tuesday. Remember, cash is still king overall. I still have around 35% of my account capital in cash, along with about 5% in leveraged ETFs on the short side. So I only have about 60% of my capital currently in long positions, and I'll be looking to get very long if the market can continue to move up with better looking charts. But for right now, as it stands, this is looking like nothing more than a dead cat bounce.